Project managers need to do so much, know so much. And one of the things that's important for all project managers is you want to build your business acumen, especially if they're looking for career progression, movement from a manager to a senior manager, to a director, to a senior director, to a program director. Today, I'm going to take you through the 8 key points every manager needs to understand about how businesses work and looking at and reading an annual report. Understanding the overall business point of view, what the strategy of the company is, how the projects or the portfolio you're running relate, and most of all, understanding the financial foundations that underline the business. I don't mean the business of your project. I mean the business of the company you're either working for or working with as a client. You'll also be able to place how your project or portfolio lives within your business's ecosystem. And then finally, you'll be able to speak the language of your business. That's important when you're talking to senior stakeholders or board members. And so let's take a look at Starbucks. It's a company we'll all understand. It's a retail company that's done an amazing thing. They've elevated a commodity, coffee and tea, to a luxury brand, a lifestyle. Now, to get started, how did I find the annual report? Google the name of the company, annual report, and the year you're looking for. Now, let me show you an example of that. But first, I'm going to put my glasses on because we're talking about small print here. And the format we're going to look at today with Starbucks annual report is very similar to what you'll find for any public company almost anywhere in the world. So first of all, you're going to notice that the annual report has 3 parts to it: management, discussion, and analysis, financial data, and then footnotes where the details are buried. The management discussion and analysis is oftentimes the aspirational. This is the information they want you to know, they want you to focus on, especially if it's led by a letter from the CEO or the board. Right at the beginning of it, or management discussion and analysis, Starbucks talks about who they are. They are a premier roaster, marketer, and retailer of specialty coffee in the world, operating in 86 markets, formed in 1985. They also give aspirational information, such as Starbucks has always been a different kind of company, one with a deep purpose where we work together to create a positive impact in the world. With coffee at our core, we pursue ambitious goals with our partners, our communities, and our planet, which we believe also contributes to the long-term stability of our business to create a thriving business powered by thriving people for a thriving planet and communities. So you can clearly see the thriving business. This is aspirational. This is who they want you to see them as. First of all, a premier product, but second of all, a company that cares about their people, their planet, the community, and their product. And here we have some more aspirational comments. Their reinvention plan that's designed to create growth, improve results of operations, and drive long-term shareholder value. These reinvention plans relate to projects such as being employer of choice. So they're talking about the business practices, policies, procedures, and the actual process for hiring people. They also want to have a leadership position around coffee, leadership from an economic perspective, but it's also about supply chain management and vendor account management. These are also projects that would be implemented in the organization and then managed as part of a department or an operations team. And they also talk about convenience and brand engagement. Again, a project to improve the customer's digital experience. In the land of AI, you can do so much more with marketing. And in fact, if you want to know more about how you can market better to your employees, I have a whole section of CX or customer experience content I've created. I'll put a link to the playlist here. The last one I'll share is store administrative tasks. So they want to focus on their customers, not on the administrative stuff that all stores have to deal with. That could be an ERP system, a CRM system. These are projects that need to be implemented. And as project managers, you can read this and start to connect the dots. And if you work for a company like Starbucks that has a reinvention or an aspirational plan, you could talk to your senior manager and find out how your project, the work you're involved in, relates to these aspirations. And certainly, the more you can connect the dots, the better. The company also recognizes in MD&A, their management discussion and analysis, that there are risks to realizing those big ambitions. And they name a couple of them in detail. And we know that they're talking about big risks here because they might have low probability but high impact. And we know that inside the company, they'll be working to mitigate these risks. Now, let's take a look at a couple of these. If you do want to know more about risk management, and risk mitigation creation, you can check out this toolbox I've created. So they face risks about global business, such as currency translation. If you're expecting the dollar to stay stable against, say, the yen, and it doesn't, that could have a major impact on your outcomes. Even if you sell the same amount, but one of those two currencies fluctuate in a negative position, you could suddenly lose millions of dollars. I need a moment. Gotta drink my Starbucks. They also could face economic issues that they can't control within the US or their international market. I mean, the pandemic is a great example of that. Issues around climate change. If there is a drought, that will impact their yield of product, and that will impact their supply chain across these 86 markets they told us about earlier. Reading these issues about risks can help project managers think about, how do those risks get interpreted into my project I'm working on? Maybe it's customer facing, maybe it's supply chain facing, but either way, you can look in this document for the kinds of risks you might want to be mentioning in your risk management documentation. So it's not that you have to be an expert on all of this, but do a deeper dive if you see something that relates to one of the areas you're working in. You never know what you can learn by reading the risk section of the MD&A. Understanding how the company makes money. And the first part of that is, where are they located? How are they constructed? Because most of their sales are coming from stores, that's important. 52% of their stores are company stores, meaning they own the real estate and they certainly own all of the content of those stores. And then they have licensed stores, which are otherwise known as franchises. These stores essentially buy the brand and some of the products like the cups and the coffee from Starbucks, but then run the operation, buy the assets, own the building separately from Starbucks. Of course, they make less revenue in those cases, but by margin, it's a pretty good deal. So we can see, of course, they're heavily invested in corporate stores that are coming from the United States and North America. We also see a huge expansion into Asia, especially China and Japan. And again, that's under the Starbucks full ownership model. This is core to how Starbucks makes their money. So let's get right into the financials, consolidated balance sheet. So this is for the entire company. So you can see that they have assets and liabilities. Assets are what you own, liabilities are what you owe. And obviously, they have some big numbers here. This is in millions, so we're looking at $3.5 billion here. That's in cash and cash equivalent. So they're carrying a lot of cash. They also have, of course, a huge investment in inventory, but you can see from 2022 to 2023, that number's been going down. So you could say they're being more efficient with their inventories. So another interesting number here is goodwill. Goodwill is an intangible asset that shows sort of the health of the company. It's a good indication for how well the company's doing in terms of managing their overall assets versus liabilities. Goodwill is a number that helps investors know, is this a company worth investing in? Maybe even a company worth buying. And that goodwill number comes up for a very simple reason. The way balance sheets work is that they need to be in balance. So you'll see that the 29 billion here is the total asset. But if you look at the total liability, you'll see that number as well. And that process is showing the balance between assets and liabilities and balancing them. That's where goodwill comes in to help do that and to show the excess against liabilities and a building up of assets over time. Now let's look at the income statement, otherwise known as the profit and loss statement. The profit and loss statement's main goal is to show where you make your money. And there's a couple of interesting things here as well. First of all, we can see net earnings from their businesses are pretty high, although it has been a bit of a roller coaster. 2022 might have been hit by the pandemic or other issues, but you can see they're bouncing back nicely from 2021's numbers. In addition to that, they also have investment hedging instruments, and you'll see that discussed a little bit in more detail in the footnotes, talking about both investments. They're making investment in their supply chain because they're betting on what the supply chain will be doing in the future, but they're also betting on currency translation with all these different markets they're in. They might bet against that money by hedging. In other words, guessing the future value in that market, in that currency. If those guesses are wrong, they'll lose money. If those guesses are right, they may make a lot of money. And just a secret, one of the companies I worked with years ago actually made more money from currency translation hedging than did from their core product. Just a little insight you may want to know about by looking at your company's financial statement. Now, something that's true for both the income statement and also the statement of cash flows is comparing what's called year over year. In other words, they're showing 3 years here, where on the balance sheet we only saw 2, because how things change over time matters a lot. A picture that's more important to look at in terms of the trend than the absolute numbers. Oftentimes, that's really the case. You can start to see problems brewing or changes in judgment by the corporation, but also cracks in their thinking where either the economics aren't working for them anymore or where something's changed in the world that was out of their control. That starts to show up, and nowhere more than in cash flow, because cash is an immediate transfer of funds, whether it's USD or some other currency. Cash is king for most companies. Now, in this case, Starbucks has a lot of cash, we see, but they're also moving a lot of money. So their net earnings are driving cash in, and their expenses are driving cash out. And the net of those two is your total cash flow. And then here's the cash going out. They are paying their bills. They are paying off short-term debt. They are paying out dividends to their stockholders. All of those things are things that drive cash out of the business. But you can see again, at the end of the period, they have a pretty healthy cash balance coming in. So now we've looked at the big 3 reports, but there's another big indicator that companies use when deciding on the big plays, the big projects that relate to those aspirational things. Could be your project is included in this, and that's their stock value. How much is a company worth? Well, you could look at their financial statements to see that, but you might actually look at their stock value. Their stock price times the number of shares outstanding is their market capitalization. So what happens here with stock price also can impact projects. I worked for a Fortune 500 company, and they looked at stock price on the daily. Big decisions about major plays, including projects, were very much driven by how well the stock is doing. Now, even if those were external factors driving stock price, the fact is, the lower your stock price, the lower your market cap. The lower your market cap, the higher the cost of borrowing is. That means your debts cost more. So investment in your company can cost more. Think of it as using a house loan versus a credit card loan. The use of that money costs you more. It's the same for companies. So understanding stock price and understanding if your company is driven by stock price and driven on your decision-making by stock price can be important for projects, because it means, will your project win? Is the timing right? Is the outcome right? Is your ROI right? Stock price is one of those things you probably want to understand before walking into either a major stakeholder meeting or a boardroom for sure. So the notes to the consolidated financial statements are essentially an appendix to the financial statements. They have to report certain things, but they don't really want you to read this back part if they can help it. But this is where you can learn a lot about how the business actually is structured. You can learn whether they have major legal issues, problems in their production line, or problems with vendors. Maybe they only have 1 or 2 big customers. That would be important to know, because if you lose those customers, your business can go under. They're talking about these details like cash flow hedging or currency translation hedging, because that's important and it's a major risk. It may have a medium probability, but a very high impact. Maybe you're interested in hedging because you're working on a treasury project. They also talk about things that drive their loyalty program. Maybe if you're working on a customer project or a marketing project, you'll want to know more about what is being said on the loyalty programs. That information can be found in the footnotes. Annual reports aren't necessarily made for project managers, but they can be a great window into understanding your company or a prospective company that you're trying to get hired into better, more intuitively, understanding the language of that company and understanding how they make money. I hope you found this information helpful. If you did, consider subscribing and liking this video. It really helps the channel get this information out to more project managers. And if you want to know more about financial terms you need to know as a project manager, check out this video. And I'll see you next time on ProjectSkillsMentor.com. Bye-bye, everybody.